Thanks very much, Jake. Excellent presentation there to kick us off and to tee us up ahead of the next session. So we're going to be looking at battery metals more broadly, and we've got an excellent panel of speakers. So I'd like to invite up Alex Tukanik from Battery One Royalty, Chris Berry from House Mountain Partners, Jake Fraser again from Roskill, and Ken Hoffman from McKinsey. So morning, gentlemen, and welcome. I think I saw Alex yesterday, but if he's not with us this morning, perhaps he can join us at some point once we get started. So thanks for that excellent presentation to sort of set the scene a little bit this morning, Jake. And I think, why don't we start again with lithium and get some other perspectives on perhaps what are some of the supply and demand drivers for lithium at the moment. We're focused in quite interestingly on the juniors and some of the capex issues that they're having. But what's driving this sort of long-term interest in this commodity class? Yeah. Get it right. So make sure you're not too dazzled. Yeah. Chris, sorry, should we start with you and bring it down? Lithium, looking at the supply and demand drivers, what did you make of, did you have anything that perhaps you wanted to add to Jake's presentation that he covered there? It was very comprehensive.
Yeah, it was pretty comprehensive. I'm not sure how to follow up. Look, I think, it's interesting, 18 months ago, this panel would have been the lead panel in this conference. The room would have been full. Now it's not, obviously. And I think that has everything to do with investor sentiment. Look, pricing is down, probably swung too high when we were all excited in 2017, and now I think you can make a pretty compelling argument that it swung too low. Whether or not we continue to fall a little bit further on the spodumene or the hydroxide or the carbonate side, remains to be seen. I think we probably do have a little bit further to fall personally, given a lot of the oversupply issues with spodumene coming out of Western Australia. But, again, when I look further downstream, when I speak with the OEMs and cathode manufacturers, no one's really aggressively reining in their sort of views on expansion. It's just a question of when, which is, I think, something you brought up several times. It's not so much what the trajectory is, it's just when do we get there. And so, I think when you start to see a company like CATL say, you know what, we're not going to do a 100 gigawatt hour factory in Germany anymore or something like that, then you can get a little concerned. But, right now it's the dark times in lithium and cobalt, and I think I'm talking a lot more these days about rare earths and nickel. I mean, those are sort of the bells of the ball. Yep. And in 18 months, I think we'll probably be talking about something different within the battery metal space that everyone's interested in. So, it does sort of shift back and forth, but again, I mean, this always, I think, was meant to be a 5 to 10 year sort of shift and move with that is not going to be linear in nature. And so, it's not for the faint of heart, but, the investors that I'm speaking with now are saying things to me like, I still believe in the EV thesis, but, tell me when I should care. Which means that they're focused on price, which is a challenge with lithium and cobalt and graphite. So.
Yep. So you think lithium sort of come down off of a high that perhaps it was overpriced, and then?
Yeah, I mean, look, I think at the peak, lithium carbonate was at $20,000 a ton, and hydroxide was $24,000. So, if you go back to his cost curve, literally every mine in the world was making money, and that's just not sustainable, no matter what the demand growth rates are. And so, here we are at, I think I've seen recently inside China, $8,000 carbonate. I personally think that's too low. When, again, coming back to his presentation, you look at that IRR of 20% or even 15%. At 15%, no one's making money. So I personally think we're at the bottom. And again, the question is how long we stay here and what are the catalysts for, the turn.
Yeah. And that would be a great follow-up question. Is it going to be?
Ask him that.
Let's move down. But yeah. But Ken, this is the first time with 121 New York. introduce yourself, and what's your take on the sort of the
Sure.
lithium setup right
My
now?
name is Ken Hoffman. I've been in the metals and mining industry for over 25 years. I joined McKinsey about 3 years ago to look at sort of mega trends. I lead the EV battery materials group that we run, which is a group of around 20 people globally. And we do some interesting stuff, including right now we are tearing down 10 Chinese EVs and looking at all the batteries and exactly what's going into them. What's interesting is a lot of times the mining companies don't know exactly what the cell manufacturers are doing with their product, how much they're using, are they reprocessing it, et cetera. So we really want to learn that. We've ripped apart a lot of Western cars in the past, Teslas, Nissans, et cetera, Chevy Volts. So it'll be interesting to see what's going on there. I just actually looked at prices. Is interesting in fast markets. They have the hydroxide price below the carbonate price, you know, I think lithium is really interesting from a couple different standpoints. I think there's sort of the good, the bad, and the ugly. In terms of the bad, lithium's a pretty easy product to find. We've heard there's a lot of products around the world. There's a lot of mines around the world. It's not that rare of a product. And two, the price is really being driven by China. And I think nobody really has a great handle on exactly what's going on with China in terms of the production cost. And that everybody's trying to figure that out. But it could be far lower than what we think. And looking at the price, perhaps it is. But I think that you're going through sort of a switch right now where China still always will be very important, but you're going to see the ramp up of Europe. And we talk to a lot of European OEMs, the word localization comes up, where they want product to be locally sourced, locally processed, et cetera. And I think they may want a different quality than what you've seen in China. So if I'm positive in lithium, and what we tell lithium miners when they come to us is, you know, don't worry so much about, look, you're going to care about the mining and the engineering and the PPMs and all that other stuff. But at the end of the day, really invest in your sales force, because at the end of the day, you have to win the contracts for the cars. And so I think at the end of the day, if you do have a lithium product, first you want to know what does your customer want, what is their timeline, how that timeline is going to progress. And look, we just don't know where the market's going. Look, we're very aggressive on battery technology. We think you're going to see a very big step change in the reduction of cost and the car movement. So, you know, our aggressive case is over 30% of cars will be EVs by 2030. And the more we look at it, the more we see. And in fact, we went to see a very large electric company, and we said, you know, and it wasn't an American EV company, and we said, hey, you know, we sort of think you can get your cost under $100 a kilowatt hour. And they laughed at us. They're like, we're already there. So, you know, and we thought we were being aggressive. So I akin this industry to the semiconductor industry. The semiconductor industry always surprised on the down, you know, in terms of the upside of cost. I think the exact same thing's going to happen here. The big question is, when do we see lithium metal become a big industry? And remember, brine is your cheapest way to make carbonate. Spodumene, and this is very generalized, is your best way to make hydroxide. If you go to a lithium metal anode, which I know Jeffrey Dawn has sort of announced an interesting battery technology that's going to be a lithium metal anode, but still have electrolyte, not to be pure solid state. If you do see a lithium metal anode, it probably will be a carbonate product made from lithium carbonate, lithium chloride. So there's a lot of different moving parts. For the producers, you need to be ahead of that, and you need to win those models, and I think that's what secures profits for you long term. But could the price go a lot lower here when it's being driven by China? Definitely.
Okay, interesting. Covered a lot there. I just want to come back to what you were saying around getting under the hood of the EVs. First of all, my question would be, so how much are EVs driving this battery, this move to sort of battery electrification of everything as a proportion of maybe other sectors, other areas demanding battery technology, battery capacity. And then another point on that, the policy changes in China at the moment, has that slowed down sort of EV production and the demand of things there, and maybe that's having a knock-on effect? I think you touched on it in your talk earlier, Jake. Ken, did you have any follow-up on
Yeah, I mean, first of all, BEV sales are still up 40% year to date. Chinese policy is incredibly fluid. They've changed their policy 5 times in 5 years. Will they change it 6 times in 6 years? I think the bet would be yes. They have hundreds of EV companies. They're trying to consolidate that industry. They want to consolidate as many companies as possible. So that policy, number one, wants to encourage electric vehicle adoption, but number two, wants to have some national champions. So right now you're seeing sort of a rough patch, but I think at the end of the day that's going to force consolidation. The overall growth will continue. They still have their long-term plans. I do think, you won't see the European market really kick in until next year. I mean, you've just had their very first, I think, reasonable car, the Porsche Taycan, be announced. Hyundai Kona is a great car, but there aren't too many other ones out there, and you can't even buy the Kona. It's sold out for like 5 years. So as they hit the marketplace, that's going to be the big change. And I think the biggest thing, when you talk to the European guys, I just spoke in Brussels, they're pretty close to getting up to Tesla. Their big fear is when they start announcing, these products actually start hitting the market in 2 to 3 years, well, Tesla will have announced something that's even better. And I know someone asked a question about stationary. There's a lot of mining companies, big mining companies, who believe stationary will be bigger than EVs. I mean, this is a huge industry, and you can tell it's real, because when you have calls with major oil companies, they are as nasty as you want it, and they are biggest deniers on this. But at the end of the conversation, they're like, shoot, we really have to pay attention. This is a multi-trillion-dollar conversion of the global economy. It is massive, and it's going to be a big deal.
Yeah, I think it's BP in the UK own the most amount of electric charge point stations. Obviously, they can see their refueling game being eroded. So yeah, huge impacts. Jake, did you have anything further to add on the EV setup there on some of those comments?
No, I think Ken's done a pretty good summary there. That's for sure. It's really a question of when we're talking about what products are going to be demanded as well as looking at from what markets you want to look at from a producer point of view, is when we're looking at the capacity of lithium moving forward, being able to serve these needs, there really needs to be one step that should be addressed a little bit more detailed, in our opinion. And that's basically, you can look at the gigafactories, you guys may agree, at the capacity that's planned. Whatever capacity plays out, that's irrelevant. But it's not the gigafactories that is going to be demanding the product. We should be looking at it from what capacity at an EV level do OEMs have to make the stuff, because these are the guys that are going to be using it. So there may be a massive amount of latent capacity of these cell companies if they go too hard too soon, but they face the challenge of not bringing enough online fast enough if the OEMs do go to EVs at a faster rate than what we expect, or a slower rate. So there's definitely a consideration that needs to be taken into account.
Do you think either scenario is more likely, or one's more preferable?
Again,
I'd rather have too much than too little.
I think you definitely don't want a shortage if you're really going to spend billions on these investments.
Yeah.
But I think it's geographically speaking as well. As Ken was saying, the Europeans are going to be demanding a different level of quality product compared to some of the Chinese, for example. And that's driven by, obviously, the difference in brands. You've got luxury brands that are now having to face restructuring of their entire business model. How do they differentiate themselves? Historically, it was they had the best internal combustion technology within engines. Now, if you've got EV powertrains, it's almost one size fits all. And how else do you differentiate yourself? Mm-hmm. And that's really something that they're quite scared of addressing. And when we're looking at it from their point of view, they're going to be still demanding premium dollars for these cars as their brand loyalty has built up over the years. But how we see that evolve, especially on a cost perspective for people to actually take up these cars, is what's going to be interesting.
Okay, yeah. Let's revert back to the miners then. And it was interesting you were saying, Ken, about this almost disconnect perhaps a little bit in terms of the miners looking further downstream. How do you propose sort of changes there, or does there need to be sort of greater collaboration, greater cross-industry collaboration across the whole value chain? Are they not quite engaging with the OEMs or enough in that kind of way?
Look, in 2012, there was less than 50,000 EVs sold in the world. This year, you'll be somewhat close to 3 million. The industry has popped up out of nowhere, and so the value chain has popped up out of nowhere. The automotive companies are used to driving their material costs. They're used to owning the value chain. They're used to saying every single year, get your cost down 3%. And this has really thrown them for a loop. Remember the early conversation between Volkswagen and Glencore over cobalt. They wanted a long-term contract at like a very, very low price for a really long period of time, and Glencore basically laughed him out of the room. I think now what's going on is the industry is sort of changed and the cobalt prices come down, and you're starting to see, and watch for Volkswagen. Volkswagen is often seen as the procurement leader of the global auto industry. They've signed up some long-term lithium deals. I think that you'll probably see them sign up, if they haven't already, some long-term cobalt deals. So what they're trying to say is, I'm going to pick 3 or 4 battery companies, CATL, LG, Panasonic, whomever, and then they're going to say, here, for this model, I need this spec. I'm going to buy the raw materials for you. You're going to make it. And so they'll still control the value chain long-term, and I think that's going to be really important. It's important on the mining companies to be, can I produce the quality? And the qualities, if you start looking at the specs for the qualities being demanded, they're very, very stringent. And so that's something I think is going to really matter, which is why we're trying to rip apart the batteries, because we're trying to figure out what is the actual detriments that you need. For example, nickel. If you need less than 1 ppm or less of iron, the Indonesian new nickel stuff ain't going to work. So how is this sort of working, and how do you get in there? And so know, if you have a lithium project, what does it produce? What are its detriments? What do the companies need? And then can you sort of work out some sort of long-term deal if you have the right mix? And I think that's going to be really important going forward.
Yep. Security of supply. So we talked a lot about lithium. What about some of the other materials within the battery mix then? How's cobalt faring in this difficult period? What's your sort of take on what's happened with the cobalt market there? Some big mine closures. Is that going to spike prices back up? Chris?
Well, prices went to the moon, and then they came back down. And, Glencore, I think, didn't want to pay a super tax in the Congo and decided to shut down what was essentially the largest, or one of the largest cobalt-producing mines in the world. And so the price has gone back up again, not to the highs that we saw in 2017, 2018. But, it just goes to show you, sort of to Ken's point, the challenges that the OEMs, everybody along the supply chain, are going to have in terms of trying to, number one, just get their hands on raw materials at scale. Number two, get those raw materials at scale and on spec, and be able to think, 3 to 5 to 10 years out. I mean, it makes total sense for a VW to want a 10-year deal, because that's their sort of cycle and how they think about things. But I think one of the big challenges right now is that disconnect between how the automotive business thinks about things and how the miners think about things. And it's very interesting to me to see how the miners of these critical metals, whatever you want to term them as, are actually in control here. They, to your point, Ken, they can laugh VW out of the room, which is something that most companies can't do.
This is a power shift now.
Yeah, it's a total flip. And so look, it makes it obviously very difficult for investors trying to figure out, well, what is the incentive cobalt price? Because just to focus on that, I mean, we all probably know in the room, we've got a situation where 96% of cobalt that's produced is a byproduct. So you have to think about nickel. You have to think about those geopolitical dynamics. Nickel, I think, is the best performing base metal in the world this year, up 60%, something like that.
Yeah.
And that's a geopolitical issue. It's not EV demand. At least that's not from my perspective. I might be mistaken on that. But then, of course, there's copper. And so you can't just sort of say, well, what is the incentive price for cobalt? Because, again, there are very few pure plays out there. The ones that are out there are, quite frankly, smaller. And I think that's another issue with cobalt. Outside of the DRC, or perhaps, a couple of deposits in Australia, there's not a lot out there that can satisfy VW for 10 years, or even BMW, or even sort of a smaller OEM for 10 years. And so it's no surprise to see so much R&D and so much discussion around battery technology and going, focusing on NCM because of safety issues and because of its track record, and also energy density, but also the fact that, look, it just uses a lot less cobalt. And, everybody wants to get to 811. I have my doubts about how quickly we'll be able to do that, again, because of safety and scalability issues. But, at Tesla, or I think a lot of other battery companies out there these days, are already looking at 9.5.5. So they're getting even less cobalt in the battery. But again, it raises concerns around safety issues. The only other thing I would say around cobalt is, look, there's now a lot more buzz around recycling these days. again, because of sort of elevated prices, even off the peaks from a couple of years ago, the economics of the recycling business have changed. And again, there are different sort of tracks. We can do pyrometallurgical, hydrometallurgical, people have their black box technology out there. But, that's a potential solution, but by no means will recycling cobalt fill a potential gap where we've got, 30% EVs by 2030. Is that right? I mean, it just won't happen. So, I guess all I'm saying is cobalt is really the issue. We talk about lithium, I think, because it's easier to understand and it's not rare and it's been used for 30 years. But cobalt is a much thornier issue. I actually think by 2025 or 2030, if we miss these even base penetration rates, it won't be because people didn't want electric vehicles. It'll be because we just couldn't get our hands on enough of the raw material at spec.
Yeah, cobalt's the headache at the moment. Is that, Jake, you subscribe to that?
Yeah, I think really, if you look at it, it's a question of feedstock for cobalt. And for cobalt to be converted into sulfate material at the qualities that's required to go to precursor, it's all about feedstock. And most of the feedstock comes from Africa, inherently the DRC. Now, even though Glencore has shut down their mine, which they've stated for 2 years, could be less, could be more, really, we feel doesn't affect the feedstock over the next 2 to 3 years. And that's because there are significant amounts built up. Moving forward into the mid-2020s is when the question starts becoming, well, as you were saying, how much does recycling start making a difference? And that is going to be a huge question. I mean, with these lithium batteries, yes, they offer a huge amount of benefits and they're very exciting, but by no means for the automotive guys is it the perfect solution. It definitely presents a lot of raw material insecurity from the different perspectives, but cobalt is definitely one of those things that is going to be a huge concern. I mean, outside of China who are converting these, there's only several companies that are now in the short term looking at bringing some online. First Cobalt up in Canada, Trent. But also with the other types of projects which are laterite focused, which are huge capexes around $1 billion centered in Australia, is even if you were to bring them all online, the percentages of cobalt sulfate that they're producing still isn't going to be enough. So really it's a scale thing, and that comes back to the question we're trying to answer, is the timing factor and when it's going to be required. So quality is definitely going to be a huge concern, and when.
Do you think there's going to be any sort of great discoveries or any sort of change, or maybe perhaps more investment at the exploration level for these rarer materials that could kickstart and change the landscape, basically change the supply chain, or is that there's just not enough being discovered, not enough positive signs that the capital is going down to find better cobalt discoveries?
Well, I think again, these materials aren't rare in the ground. I feel like if you go to the USGS website and you look at lithium, you look at cobalt, I mean, there's plenty of it. There's 70 years of supply, but of course, as we keep kind of hammering, right, getting it out of the ground, commercializing it is one thing, and then, with respect to battery technology breakthroughs, I mean, I feel like I say this a lot at these conferences, but I have a Google alert set up for, I can't remember, it's like battery breakthrough or something like that, or lithium-ion development. And every week there's a Russian scientist that has a spray paint graphene battery that, charges in 5 minutes. I'm kind of serious about this. And then you never hear about it anymore. And the reason why you don't hear about it is not because it wasn't true. It's because it takes 5, 10, 15 years to develop this from the lab to the pilot scale to commercialize it. And so that's why, lithium ion is the ultimate winner for mobility. But that chemistry is going to change. And the only other thing I'll say is we keep talking about NCM and NCA as the dominant automotive chemistries. I wouldn't ignore LFP, lithium iron phosphate. I think a lot of the ultimate battery chemistry that's going to be used is going to differ, for example, for a bus relative to a Tesla or something like that, because those modes of transport are, quite frankly, used differently.
So the lithium ion's here for the next 10 years?
I would say 10 to 15. I just think that the track record, the supply chains, everything is sort of set, and vanadium redox is arguably a better energy storage technology. But if you've seen any of these batteries, they're giant. I mean, they probably fill this room. So obviously not practical for automotive, but a great solution for large scale, kind of grid scale energy storage.
If I could just add something quickly to that, with the whole question of lithium ion serving the needs in the short term, is we deal with quite a lot of large OEMs as clients, and to be honest, when leading their procurement teams and talking to them about what strategies they're employing for these commodities, I think one of the most interesting questions is, we know that it's not the perfect solution from a cost basis at the moment with the raw material issues that need to be solved, but if they had the preference on spending billions of dollars on procuring raw material supply versus spending billions of dollars on R&D and inventing a new technology that solves a lot of these issues, it's kind of like, if that was the magic answer, then it's quite interesting to see which way they would go. And I'll leave it at that. But it's yeah. The next 5 to 10 years, it's lithium. We definitely feel is the space that's where it's going to be.
Okay, good.
It's pretty interesting. Like if this was a conference for automotive, first of all, the room would be packed. I spoke at AABC in San Diego. I think they had like 1,500 people there. Optimism, where's all this material going to come from? The mining industry isn't investing. It's just not there. Tesla's publicly out there saying we're going to run out of nickel. And then you go to mining conferences or big mining companies, and they're like, don't see it. Maybe if nickel gets above 20,000, we'll think about it. The rest of the stuff we don't want to touch. It's sort of, you have such a dichotomy between a mining conference and an automotive conference. And I think at the end of the day, everyone always comes back to Tesla. Tesla just does things differently. So Tesla thinks of a car as a technology. They produce their first models on sort of their test tooling. Like, they don't even ramp it up. They just get it out the door. And that is what freaks out the automotive companies. The automotive companies are used to these 7-year cycles, and let's go through it and let's test the heck out of it, and it's worked. But when you have a competitor that sort of says, we're going to throw it out there with 2-year cycles, and they constantly innovate, it really has caused angst. And if you're sort of going back to your original point, when you talk to automotive companies in Europe, they tell you 2 things. We have 2 options here in Europe. We produce an electric vehicle, or we go bankrupt. We figured out the new regulations going into Europe 2020 will add 15,000 euros to a car price, to an internal combustion engine. That puts out all your low-end cars. So that's why you're seeing all of these joint ventures, consolidations, everything else, because the automakers are facing this. How do I deal with EV technology, which I have to do? How do I deal with driverless cars, which everyone seems like you have to sort of go at that? And how do I do all this sort of to what Jake was saying? Like, at the end of the day, if there's the same battery for every single car, how do I differentiate a Volkswagen from a Porsche? Has the same range, has the same charge time, and everything else. And remember, we survey about 15 to 20,000 people every 2 years about EVs. Number 1 choice, whether you're in Europe, and I know Europeans only drive about 6 meters to work every day, or Americans or Asians, it doesn't matter. Number 1 concern is range. Number 2 concern is charge time. So range is what really drives the nickel-based battery, because that's what holds your charge. And I think that's something out there at the end of the day. And while I'll be the optimist on 811 or 90505, the biggest concern for these guys, obviously safety is a huge issue, but their big fear is somebody else is going to figure that out and come out there with the 600, 700 kilometer range car, and I don't have it. Because my engineers were telling me, be really safe, really make sure it's good. But if you look, the Kona comes out, who knows if it's a good or a bad car, but it had, I think, 500, 550 kilometer range, sold out for 3 years. They can't make the things. So that is going to be a big issue.
Okay. Do we have any questions from the floor here? Yeah, we've got one down here. Could someone bring a mic? Thanks.
Of the alternatives to lithium, you mentioned graphene and a couple of others, aluminum perhaps, and photosynthesis, biofuels are not, in other words, if you zoom out 50 years, I'm just curious because I'm writing a book about it, are you optimistic that the alternatives to lithium, given the long lead times for commercialization of 5-15 years, we will have a diversified portfolio of alternatives to lithium in 15 years, 20 years?
The industry changes so so much faster than that? I mean, that's a great question, and I think it's what everybody struggles with. I guess my kind of blanket answer would be yes. Now, what those are is an entirely different question. You know, all of the research that I am seeing is lithium based for now, which makes me think that whether or not it's lithium sulfur, lithium air, lithium is going to be that kind of linchpin, if you will. And again, it's just where it sits on the periodic table, right? It's lightweight. It holds a charge better than almost anything out there. But again, I think that, look, you'd use a power tool differently than you drive a car versus how you drive a bus, and that is going to necessitate different chemistries. But you know, I don't know if you guys have any thoughts on beyond lithium, but I don't see much changing for the next 10 to 15 years, really.
No, not necessarily beyond lithium. No, it's more like you were saying before with the evolution of what type or chemistries will be employed. And as Ken was saying, if we go solid state, which requires lithium metal, that brings a whole new issue to the ball game where lithium metal market is tiny. And there are a lot of difficulties in trying to manufacture the metal to the thicknesses that are required for these batteries, let alone on a commercial scale. So it's not necessarily a huge fix, but that's if we shift to different sorts of states like that, then we present ourselves with additional problems that need to be solved. It's not to say they can't be solved, but in the current state, it's definitely a phase that needs a bit more R&D. So.
I actually had to go to Japan to talk to a group of executives about materials in 2050. I said, you know, I'll be 100 or whatever I'll be. You know, I don't care. I'll be dead wrong. A couple of things that have to happen with materials to become widespread. Number one, there has to be a lot of it. Why does the automotive hate cobalt? It's 130, 140,000 ton market. Nickel market's 2.5, 3 million tons. And if you talk about class one, it's 1.5 million ton market. Manganese, that's where graphene gets really interesting for me because, you know, manganese, so nickel loves to hold a charge and loves to give it up quickly and take it in quickly. People love it. But there won't be a lot of it. We think there's going to be a huge problem with nickel in the next few years. Manganese, 25 million ton market, right? It's very big. It doesn't like to give up or, you know, you hit the accelerator, nothing's really going to happen. Graphene doping of manganese, which I think the Koreans have really looked into, that's a really interesting technology. And that's where I think graphene is really, really interesting stuff. Beyond that, I mean, you know, it's like the semiconductor industry. Who knew, you know, the changes? So I think what you see now is there's a leap, you know, to this cathode technology. The next leap should be anode technology. But from there, the materials that go in there, it's in a lab someplace and can be commercialized. Just know that it has to be commercialized because if I'm going to make 30% of worldwide vehicles, I have to make 36 million of these things, or 50 million, or 100 million.
Let me ask a very quick follow-up question. There's national laboratories like the one near Denver, National Renewable Energy Laboratory, and I'm sure China and Europe have their equivalent laboratories like Manhattan-style projects where they can throw some money at it and give PhDs research money. So given that we have a whole new generation of climate change strikers on Friday who want to go, some of whom may go into STEM-related careers like geoengineering and battery technology, I'm not asking for you to advise them, but I'm just curious, isn't there a huge wave of interest in going into cutting-edge research now that you didn't see 5-10 years ago? I mean, there's more enthusiasm about the alternatives.
Oh, there is. I mean, if you go to, I mean, at AABC, there had to be several dozen small startups with really interesting ideas. MIT has spun off some companies like 24M. The U.S. is sort of pathetic in its funding for green resources relative to what you're seeing, particularly in China, Japan, Korea, and then Europe. I mean, we are so far behind, it's not even close. But yeah, I mean, you do see a lot of interest because there's a lot of people who think they can solve deals. The big question is you get, like at AABC, a lot of the people want to solve parts of the problem. And I had a really good conversation with someone who said, if you look at Apple, Google, Amazon, they had an idea. They weren't the first ones with an idea, but they pieced together other parts of that puzzle to come up with the best search engine or iPhone, et cetera. A lot of these people think, I have the solution to this and to that, and who's going to be the consolidator of it to make that best-in-class battery? That's really interesting stuff.
Interesting.
Yep. A couple of minutes left. Is there any other questions for the panel at all? I'd like to just quickly wrap up, but bring it back to the miners. And perhaps you touched on some of the points at the end of your talk there, Jake, but if everyone wants to chime in with anything, if you had any sort of advice of sort of what to look out for, we've seen these capex shocks that have come into some of the lithium developers. How can they, what should the mining companies be looking out for in the next sort of near to midterm, or what should they be focusing on as a priority in the minute?
I think in terms of battery materials, as lithium, as I've spoke about before, it's really a cost issue, and being able to deliver on that from the other materials such as nickel and cobalt. Laterite projects are huge capital expenditures, terrible ramp-up histories. I think for mining companies, it's really about delivering on feasibility studies that have been really robust and really gone through it with a fine-tooth comb. And the reason for that is you look at these investment funds or banks, financial institutions that are the guys who need to give the money for the investment, yet really a lot of them aren't too interested, or at least are tendering their expectations, because basically a lot of these studies always give you the best case scenario. And that's where looking at some of the assumptions, especially on the fundamentals, is most important. So from a company point of view, I suppose in development stage, I'd be focusing on that.
Chris, any take?
Just manage the balance sheet. I mean, you can't control pricing, and so try to minimize your exposure to debt when you're pre-production. One other point, just with respect to large pools of strategic capital. I mean, look, they've predominantly been Chinese at this point in time. It's been Ganfeng. It's been other groups like that. I mean, the Wesfarmers deal with SQM and Kidman, that was fantastic. But we need to see like 5 of those, large pools of capital that had the patience to look out 5 to 7 years for some of these deals to say, look, we're willing to weather spodumene at $400 a ton because we can see what's coming down the pipe. So you need to see more of that in the West.
Yep.
I'm speaking at 11:20, so I'll talk a bit more. I'm talking about coppers and EVs. I can talk a little bit more about this. I have a cool battery progression chart I'll show.
Yep. Excellent. All right. Let's have a round of applause for our panelists. Thank you.